Welcome to Trade the Trend, a weekly video about where the stock market is heading. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil, and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only, doesn't take your personal situation into account. With all that said, let's get into our first chart. So to start off with, I have the SP 500 here on the screen. And on Wednesday, we have a new all-time high for the SP 500. Now that follows a 2-week consolidation that came after the September rally. So the September rally, 2-week consolidation, new all-time high. But has the market run far enough? Should we be looking for a top or maybe even a major top? I think it's really interesting. It's an interesting question. I've seen some bearish postings on X, the old Twitter, on X during the week. One in particular caught my eye. It was pointing out the similarities between now and the 2007 peak, which was of course the leader into the GFC bear market. I'll come back to this in a moment, but first, let's look at one of the drivers of this week's rally. And that driver, of course, was NVIDIA. It's broken higher out of this 4-month trading range that it had been consolidating within. We looked at this last week. We're looking at this and talking about NVIDIA last week. The consolidation it's got that classic contracting appearance to it. And we often see these patterns during pauses in a rising trend. And we've had exactly that in NVIDIA. We've had that rising trend, had the pause. Now we have the breakout. I think the odds here favor that we'll see more upside in NVIDIA, which of course is a big contributor to the SP 500. But NVIDIA, well, it's just one stock. What about the rest of the market? That's always really important to consider. I want you to have a look at this indicator. I think this is an important indicator to be aware of. Now, what this is doing, this is showing you the percentage of the SP 500 stocks above their 100-day moving average. And it currently stands at 76%. There are currently 76% of the S&P 500 stocks, or about 3/4 of those stocks, are currently above their 100-day moving averages. And importantly, this percentage is currently increasing. Well, it's generally increasing. It has pulled back a little bit in the last week or two, but generally this is increasing. And you can see this by looking at these rising moving averages. It's just showing the average. The average has been increasing over the last couple of months, and also this the indicator is currently above those rising moving averages. So I think an increasing number of stocks trading above their moving averages that is of course a positive thing. The other thing to note is when we compress this indicator up a bit, just looking where it currently stands, it does have scope. It's got considerable scope to continue to increase from its current levels before it gets to those points where it does tend to top out. But even at those higher levels, it can remain elevated for some time. So there's no immediate sign there that there's trouble in the way that the stocks within the market are behaving. And another interesting way which we can see this playing out is when we look at the equal weight, the S&P 500 on an equal weight basis. So while NVIDIA has a big influence on the S&P 500, it's only 1/500th when you look at it on an equal weighted basis. And so this is my preferred measure, looking at the health of the overall market, because it's removing that big influence stocks like NVIDIA and Apple and Microsoft has. And as it stands, the equal weight, it's got those classic characteristics of a bullish market. We can see a series of higher highs and higher lows. It also has those rising 50 and 100-day moving averages, and price is currently above those moving averages. So coming back to that earlier question, should we be looking for a top? I think at this stage, the evidence just isn't there to suggest that prices are topping. That isn't to say that prices can't top, but the path of least resistance, as it currently stands, is upwards. I think the odds continue to favour being long stocks for those reasons. And this is the thing with trends. They can last longer and they can travel further than just about anyone can anticipate. And so rather than trying to forecast their end, I think the better play is go with them, see how far they run. And we don't need to predict the end of a trend because we can use strategies like trailing stops because they can help exit the market when conditions change. They're a bit like having, I guess you could say a trailing stop is a bit like having an each way bet. It's about making money while the trend is rising and then protecting capital when the trailing stop eventually triggers and when the market turns. I've got one more chart for you, but just quickly, if you're getting value, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It tells you you're watching. YouTube shows other people. And hit that subscribe button if you haven't already done so. Okay, just quickly to wrap up. The Russell, quick look at the Russell, the small caps. Price action over the last 4 weeks. Just look at this price action over the last 4 weeks. It's made its way back, slowly ground its way back to the 50-day moving average. And just look at the way that it's done it. It's choppy, it's overlapping. It has all the characteristics of a corrective move. We've got this series of over the last 10 months, we've got this series of higher lows and higher highs, even though this has been a market which hasn't really joined in with what we've seen in the NASDAQ and the SP 500. It does have a bullish structure to it. And I think these that we're seeing support on pullbacks, it's telling us that there is demand to buy these stocks. I think the setup for a rally is currently in place. Just looking at the way the market has pulled back over the last 4 weeks, had that strong rally off the September low and a corrective looking pullback. So this doesn't mean that the market has to rally, but I think there's a strong possibility that the Russell is coiling up, particularly over these last several months. I think it's coiling up and preparing for an upside break. And I think the upside potential in the Russell, I think this is just another reason to remain optimistic about the path for stocks and to stay with that trend rather than trying to preempt some sort of high, at least until we get evidence that could be occurring, which just does not seem to be there at the moment. So I think we will call that a wrap for this week. So, hey, thanks for joining me. Hopefully that's been interesting. Hope it gives you a few ideas. I look forward to coming back, talking to you again next week. Till then, bye for now.